Is it possible to improve your credit score by 100 points? I'm Daryl Schwant with Key Mortgage Experts, and I'm here to give you mortgage insights regarding credit scores. Today, I'll be giving you another real-life example on how to improve your credit score. Most people want good credit, but they don't know what they're doing wrong. Let's take a look at a credit simulation and see what we can do to improve the score. This individual has a 755 Equifax, 678 Experian, and 684 TransUnion. That is a 70-point difference between Equifax and TransUnion. 70 points. Now, when we dive deeper into the credit report, we can find two small collections that are showing up on Experian and TransUnion, which is causing those scores to be low. There's another account that is pushing all the scores down. A credit card with Citibank has a balance over 50% of the credit limit. Take a look here. Credit limit is $7,000 and the balance is $3,700. When anyone goes above 50% of the credit limit, credit scores will take a nosedive. Let me show you what I showed the customer. We can really improve those scores with just a little bit of work. I had the client contact the two collection creditors and pay them off in full. In exchange for full payment, the creditors agreed to remove them from the credit report. So let's zero out those collections and delete them and see what happens to the credit scores. Holy cow, the credit scores just went up by 45 points. They're now sitting at 730. Next, I told the customer to pay the credit card down. The question is, by how much? If we pay down the card to $2,500, then the score goes up to 746. If we pay it down to $1,500, then the score goes up to 758. And if we pay it down to $1,000, then the score goes up to 780. 780. Now, in most cases, you get a higher score if you leave a small balance versus paying it off. So with just a little bit of effort, we can get the credit score to go up by 96 points. That's almost 100 points. Let's take a look at the impact 96 points has. This client is putting 10% down, so they're going to have mortgage insurance. Looking at the rate sheet, you can see they were about to pay $2,300 in points just to get a rate of 8.125%. The payment would be $46.77 a month, and mortgage insurance adds another $236 per month. Now, both the interest rate and mortgage insurance are really high because of the low credit score. Principal and interest plus mortgage insurance gives them a payment of $4,914 a month. Now, let's take a look at the rate sheet after they get their credit score up to 780. Both the rate and mortgage insurance went down. If they pay $2,600 in points, they get a rate of 7.375% and pay $43.51 a month. But the mortgage insurance is only $78 a month. That dropped their total payment to $44.30 a month. The client just saved themselves $483 a month. That's almost $500 a month, and all they had to do was make a couple calls and pay off some bills. This is life-changing. Who wouldn't do this? Okay, this worked out for my clients, but everyone's situation is different, so you need to do the right thing to help yourself. If you're looking to buy or refinance a home, contact me if you want something better. And don't forget to like, subscribe, or follow if you learned something new today. I'm Daryl Schwant with Key Mortgage Experts. Thanks for watching.